Repurchase agreement. Repurchase means what? Once you sold immediately, if there is any options to purchase once again. The liquidity means what? Any instrument which is related to financial product, easily if you try to convert into cash. When you are raising a fund through capital market or money market, so there should be always stability in the finance. Hello everyone, a warm welcome to one and all. I am Natesh, lecturer in commerce, Vidhyaashram First Grade College, MYSURU, the Temple of Excellence. We are in the Unit 2, Section 4, 5th semester BCom, Financial Institution and Market. The chapter name is Capital Market and Money Market. So, and today my agenda, you are getting more clarity about the importance of money market, why it is important for any nation, okay? So, and what are the instruments are available in the money market? As an investor, before starting going for investing any specific instrument, so obviously they are expecting a return. What are the instrument? And you will get a recent trend in the money market. So, moving forward one by one, the first one, importance of money market. So, importance of money market, which is coming under financial system in India. If you're talking related to nation-wise, okay, there are too many instrument or financial product are available for the investor. Okay, so those who are instruments, which one will generating a revenue for the individual person, either we can consider for individual or businessman or banking sector or company. Okay, so here the first one, liquidity management. The liquidity means what? Any instrument which is related to financial product, easily if you try to convert into cash. So obviously it is nothing but the liquidity management. So it help entity to manage short-term cash needs, because each and every individual as a banking sector, okay, or any institution or government, so the finance is very important. The cash conversion will be happening using a money market product. And next one, interest rate benchmark. Interest rate means when you are investing, of course you are expecting a interest. So it set a short-term interest rate for benchmark. So every instrument giving returns, right? So which is interest or dividend, okay, so whatever it may be which is related to instrument rate. Next one, financial stability. So the nation economic, when you are raising a fund through capital market or money market, so there should be always stability in the finance. Okay, so it help to stabilizing the financial system, not only for capital market, which is going for the money market concept also, the stability level. Okay, and the corporate and government financing. Corporate, either which is related to private or public, even the government also, they want to use for money market, okay, money market related product. So it provides short term funding option, because short term funding options, so majorly we are speaking like working capital, okay, the day to day expenditure, okay, so accepting the payment. And next one, arbitrage opportunity. Traders profit from the rate difference, because each and every the trading what you are doing, so obviously we are finding a arbitrage opportunity we are getting here. And moving forward, the importance of money market. So here the edging and risk management. So it allow risk mitigation, because investing means obviously there is a risk are connected. So which is when you are selecting compared to capital market, the risk is high. Okay, so next one, market research. It offer inside the economic health. So we are getting a different product through the research. So which instrument are generating, so what is the maturity level, how much you can generate with the help of instrument. Okay, and next one, investment diversification. As an investor, if you don't have any idea about the money market product which is giving a returns, okay, so individual diversify for portfolio. So obviously when you are selecting an instrument, there are different instrument are generating a different returns. There is a risk are connected. So the same time the portfolio diversification of different investment, either you are going for security. Next one, monetary policy transmission. So the rate of interest which is completely connected. So central bank, each and every country, the central banking is taking a responsibility to set a rate of interest. Okay, used for the policy implementation at the time of implementing a policy, at the time of rate fixation in the bank rate. Okay, so the monetary policy which is controlled by the regulated by the central bank or RBI. Moving forward, next one, what are the instruments of money market? There are different types of instruments are available throughout the world. So here the first one, treasury bill. The treasury bill, no doubt, where money market means always which is focusing for the short period only. The short term government debts with a maturity up to day one. Okay, so minimum 1 day, the maximum 1 year. So which is coming under the treasury. And next one, the commercial paper, short term and unsecured debt issued by the corporation. Okay, which is not secured, unsecured. Next one, the certificate of deposit. Short, we are reading like a CD. The time deposit with fixed maturity offered by the bank. So as an investor, if you are depositing, they won't get any safety. So the actually the bankers are providing a certificate for accepting the deposit from the investors. Next one, repurchase agreement. Repurchase means what? Once you sold immediately, if there is any options to purchase once again. So the short-term lending transaction often involving government security, so which is called for repurchasing. And next one, banker acceptance. In case of any trading or inventory related, the acceptance on behalf of the payment settlement, the bankers are taking a responsibility go for accepting. So which is a payment, the transactions will happening today, but the payment will go for the future. So that is the acceptance. The time draft guaranteed by the bank because of the in between buyer and seller, when the payment is going, so obviously there is an acceptance given by the buyer because they already purchased. Often used for international trade because both the person, buyer and seller, both the person are very stranger for the purchasing or selling the goods. So that time the bankers will acceptance. Okay, here who is going to really pay? So we call it as a payee here. The amount, the date, the maturity period, everything they clearly specified. And sixth one, money market fund. Okay, the money market fund, investment fund that offer liquidity and competitive yield. So the name only suggesting it is very money instrument. And next one, treasury repo market. Treasury repo market, repurchasing agreement involved for treasury security in between bankers when they are trying to go for repurchasing. And next one, municipal note. The short-term notes issued by the municipality for financing. So each and every city or state, there is a concern municipality authority when they are raising a fund through the notes. Next, euro dollar deposit, which is majorly we are finding in the US dollar deposited in foreign bank. So this is one kind of instrument we are finding here. Moving forward, the recent trend in money market, there are different instruments are available. There are a lot of evaluations are going on. So obviously here the first one, interest rate deregulation. So that means the regulation towards when they are fixing a rate of interest, so which is completely deregulation, means the rate of interest can be increased or decreased based on the demand and supply. The government lifted for interest rate ceiling, allow market force to determine the rate. So which is completely depending on the market condition which is deciding for the rate of interest. Okay, so the regulations means actually you are giving for full freedom, Lisa. And the money market mutual fund, which is a short-term investment compared to normal mutual fund. The mutual fund here the risk factors will be reducing. So introduced in the 1992 for short-term investment, open to individual and corporation. So as an individual they can invest with the help of instrument called money market mutual fund compared to the mutual fund. And next one, discount and finance housing of India. Discount and finance housing of India. So which is completely related to the product the established in 1988 to enhance the money market liquidity position. So that is actually when you are investing for the specific instrument, they actually we are finding through the instrument. And the liquidity adjustment facility. So liquidity adjustment facility, because the movement of the cash how it is very flow easily it can give flow. RBI used repo transaction for active money market participation, so which is actually raising the fund with the try to go for the liquidating. And the next one, electronic transaction implement, which is actually when the transactions in between the investors and lender, those who are accepting the financial institute, implemented for transparency and efficiency in the money market dealing, because nowadays we are not doing any paper transaction. With the help of a digital platform, electronic platform, the trading can be easy, so which is also recent trend. And the next one, Clear Corporation India Limited, whenever the payment and settlement which is going through the Clear Corporation, the founded in the 2001 to clear government security and repo. Okay. And next one, seventh one, new market instrument, whenever, because there is a lot of development are finding in the money market, even the capital marketing. So the treasury bill, commercial paper, certificate of deposit, and other introduce a new money market instrument. Keep on watch for next section. Thank you.